Hello and welcome to The Exit presented by Flippa. This is a 30-minute podcast featuring amazing entrepreneurs who have been there and they have done it. The Exit talks to operators who have bought and sold businesses of all different sizes. You'll learn how they did it, why they did it, and get exposure to the world of exits. It's a world occupied by a small few, but accessible to many. And on this special episode, I sit down with Jeremy Bell, the head of M&A at Elevate Brands, and as well as the seller of a business, Josh Dittrich. And these two talk about how the acquisition happened. And this is such a unique perspective because we have both the seller, Josh, talking about his Amazon business that he built over 5 years, leading into the conversation with Jeremy at Elevate Brands, who was the buyer of that business. Now, this is such a unique perspective. I did my best to go back and forth between the two of these amazing guys through this interview. So without further ado, let's dive right into this both buyer and seller interview here on The Exit. All right, guys, I am here today on this special episode, joined by serial entrepreneur Josh Dittrich, who is a really well-known Amazon storefront seller, as well as the head of M&A at Elevator Brands, Jeremy Bell. How's it going today, gentlemen?
Doing well, doing well. Thanks for having us.
Yeah, fantastic, Steve. Good to be here.
Yeah. So this is a special opportunity for us to not only learn from the seller side, but also learn from the buyer side. So before we get into Elevator Brands, let's talk a little bit about you, Josh. Let's hear what's your background, what got you into starting Amazon storefronts?
Honestly, I think if you think back to the origin story, it was really just out of frustration that living the corporate life tied to someone else's rules and vision and execution, wasn't my jam. I think I wanted and I knew I was capable. It was really a matter of when, not if. But that was really the motivation behind it. I saw my father and grandfather both, run businesses. Unfortunately, they were more like jobs, right? That required them to be in the chair to do the work. So I never really saw, business ownership as something that I wanted to do, but quickly realizing that I had skills and capabilities. So for me, it was just trying to figure out what is the right model in which I could be an entrepreneur or a business owner. And the best part, the best example is really the Amway model. Back in college, I was approached by a guy in Amway, and at the end of the day, I was sucked in. And the moral of the story was, unlimited opportunity for time and income, right? And to me, it wasn't about that particular opportunity. It was about the freedom to be able to have unlimited upside, but also getting your time back. And so thinking about the space, e-commerce is probably one of the most awesome opportunities to earn passive income, right? There's a lot of ways to do it, and different skill sets are required to be a writer, to be a blogger, those types of things. But for me, it was like building. And so I helped a group kind of grow from 3 million to 50 million online, and learned soup to nuts, how to be an enterprise seller, how to build a brand, the technology side, the operations side, the product side, and figured out, if I could private label, and this is back a number of years ago, but if I could private label a certain product category, I could take that theory and apply a private brand to any product category. And that's how the brand was born. So that's kind of the inspiration behind it. And for me, it's something that I am proud of for sure, but it was all right, a lot of sacrifices, a lot of blood, and it was all worth it. Right.
Mm-hmm. Yeah, for sure. And I like that you had that example early on. You had your dad as an example of how you really wanted to kind of do it differently. You noticed you had skills, and you noticed that was kind of the route you wanted to take. And I think that that's a really unique chance for you to see that as a model when you were growing up. That's fantastic. So in terms of the business, you built it up on Amazon. How long did that take? And how did the initial conversations start with Jeremy?
I've always been a bit of a dabbler on eBay and Amazon, and there's definitely, if you ask my wife, a number of failures. inventory that's very old and obsolete. Fortunately, it's lent itself well. I used to sell rings, tungsten rings, after buying, telling my wife which ring I would want her to buy for our wedding, and saw that the jewelry store was way out of range. So there's a lot of failures in between, but so I can't really tell you how far back we go. But in terms of the brand that I decided to finally get launched and get cooking, was roughly 5 years ago. And, it really started side hustle, nights and weekends. I would work a 60, 70-hour corporate job, and I would come home and I would pound the computer at night at the edge of my bed. And, it was about a year before I multiplied my income. I still stayed at the full-time job and put enough money in the bank to feel comfortable that it was really time to go full-time. And so at that point, I was very confident, and it was really about doubling down. So, 5 years of really hard, active brand building. And so really through that process, as an entrepreneur, we had a number of other businesses going on. We had an e-commerce business primarily off Amazon. And after the COVID period in that business, it really made sense to look at perhaps selling that business. So the process started with me actually finding a broker, because we knew it was a little unique. And that business, was a mix of wholesale, Shopify website, Amazon, and it would take a unique buyer. So that's why I thought, maybe a broker made sense. But through that process, I met a couple of aggregators, and a couple of them were interested in that brand, but it wasn't really the right fit. So the light came on that, this Amazon business that we built, it really made a lot of sense to start thinking about selling that brand. And it went from selling this other brand, last December, to deciding to sell two brands, and one with a broker and one by myself. And did a ton of research, was able to kind of figure out that the aggregator space is blowing up. A number of players have raised multiple billions of dollars to go out and buy Amazon brands. That there was really something here, and that it's a great time to sell. And so, the way that I am, it's like, where do I find the list of these guys? How do I outreach to them? Let's fill out web forms. Let's get on LinkedIn, and created a list of roughly 30 groups that are out there buying Amazon brands, and reached out to all of them. I connected with about 20 of them. 13 were very interested in an offer, and I ended up getting 6 offers. And so we ended up selling to Elevate Brands. And Jeremy is one of the top guys I think I've ever met in terms of just personality, skill, style, and really got excited about the prospect of working with Elevate. So I think great group of guys, and the process was pretty amazing, actually.
Well done. Well done. I love the casting the wide net, getting enough offers on the table to really give yourself some decision-making power. I like that. In terms of the segue now to Jeremy, I want to get your perspective on doing diligence. When you have a business that comes across like Josh's, how do you go through the process of, making sure that it's a good investment, making sure that everything is in order, and what are you looking for?
Yeah, it's a great question. So when Josh first came to us, it was just a random email through the website. We'd never met the guy. We knew nothing about his brand. So the first thing we did was we just got on the phone with them, and it basically kicks off as just a friendly chat. Talk to us about your business. How do you run your business? What's your philosophy? Josh has been quite humble, but he did have quite a large business that he'd built very, very successfully. And there were a number of SKUs in there. So for us, a lot of the aggregators at the moment are some of them just want to buy small SKU businesses, but we're open to buying businesses with more SKUs. So really what we tried to get behind was Josh had a very, the way they ran their business, they had a real set strategy around, we launch products, we incubate them, and then when they get traction, we kind of really invest in them and blow them up. And as we looked through the portfolio of SKUs, we understood his strategy, and we liked the business, and we thought there's good continued upside. It was growing really nicely. They were doing everything really well. And really the key task for us in underwriting was trying to verify that what Josh had told us was correct. So we spent a lot of time like looking at the different cohorts. The way we divided up the business was we just looked at the different cohorts of products and said, right, these ones have graduated and they're really big. They're really big like products in themselves. These ones are up and coming and these ones have just started. So really for us, it was kind of verifying everything, the strategy and the kind of commercial components of how Josh ran his business, and just being able to make sure that the financials married with the story, and they did. And I think the couple of things that Josh did really well was like he was very clear with like his strategy and how he ran his business. And that made it very easy for us to kind of interpret that information and then go and underwrite against that kind of story that he told us. Because really, like, you know, the strategy is what you set and how you run your business. The numbers are the hymn sheet that everyone sings off to make sure that whether or not that, you know, it sounds good and it marries up to the strategy. So that's effectively what we did. The other thing that they did, which was great, was they had really strong systems and accounting. And if he didn't, then I don't think we probably could have got through the underwriting process, because there were a lot of SKUs, but like their financials and the way that they stored data, the way that they had records was like impeccable. And like one of the biggest learnings, I think, or lessons to take away from this experience is, if you're building your business, make sure you really invest in the processes and the systems like Josh did, because it just makes all the difference in the end. Because, you know, as we assessed this business, like everything ticked out. And for a big business like Josh had, like that's key. Because if there's any risk for a buyer, then they just discount price. And Josh constantly throughout the process was just kind of probing, like, are you guys going to cut price? Like, is there any risk here? And we, you know, there is none, because the numbers stack out. Like when you go to market with a number and you say that your business makes X, the first thing any buyer is going to want to do is verify that it makes X, and his did. So it was a real smooth process. You know, it was very collaborative. And I think there was a shared vision about what the brand will become. And I think there was just a good alignment between the personalities. So it was a very smooth process. Like we clearly defined what we wanted to do, and we hit each of those objectives. So both of us were kind of aligned on the plan and how we're going to execute against it. I think the other thing that Josh kind of highlighted there that he did well, and it cost us more money, but he did run like a structured process. He did go out and get multiple bids, and he did guide parties to, you know, you have to bid by this date. And then he assessed everyone, and we had multiple phone calls going back and forward around, you know, the value. And in the end, he negotiated a better deal for himself because of it. So,
Nice.
yeah.
Nice. So this is to timing. I think a lot of people listening out there, young entrepreneurs that have started a business and they're wondering what the right timing is. Josh, you previously touched on it slightly around, you know, you did this for 5 years, you built a good business. I'm definitely want to get both your perspectives on this, because it is a consistent question that comes up. So let's start with you, Josh, in terms of the time to sell the business. Why was it the right time for you guys?
Yeah, I think there's a number of components here that feed into that, Steve. I think when I think about timing, you know, a lot of people think about the stock market, right? And timing the stock market doesn't really, it's not a good systematic process, right? There's a lot of ups and downs. And so, you know, you never want to buy at the top, you never want to sell at the bottom. So clearly that makes sense. But when we were thinking about the macro, you know, industry as a whole, the theory around, okay, you know, if you're tracking business acquisitions, for example, there's a number of sites that publish different things. You look at the history of deals that have sold, and you look at the average multiple over time. Certainly we saw a trend, right? But the bigger thing here was, when you have a finite amount of sellers that are doing, you know, 2, 3, 5, 10, 20 million on Amazon, and now you have a whole bunch of buyers, it's a perfect storm to really think about supply and demand, right? So for us, like seeing that trend, knowing that early on there's an opportunity to really maximize, you know, as Jeremy mentioned, the exit price, that to me made sense, but it was really a matter of when, again, we were going to sell. You know, whenever we start a business or build a business, it's about thinking about the exit strategy in mind. It's not just this thing that we do and we hope to make some money. It's very, very specific with that purpose, right? So I think leading up to that, there were some things we wanted to do prior to being, you know, on the market as well. And that's like Jeremy said, like clean financials. So it's easy to get started and run a business really quickly and just start putting expenses in and revenue in. But when you boil it down, that's all fine. It's a good starting point. A lot of folks don't even do that. So start there. But then the next layer of that is making sure that your story checks out, right? When you look at sales and the business reports in Amazon, that you're actually doing a gross to net when it comes down to the sales and the expenses and the advertising costs and the cost of goods to come up with a true profit, right? Keep your inventory on your books. So these little things, when we first started, we didn't have. Like we would enter sales as the deposit from Amazon, right? Well, it's like we're missing out on a whole bunch of sales here. Those aren't actually sales, right? That's just the net deposit. So you start to think about those things, like there's a preparation and a time and an effort to get that ready. So we knew sort of going into the beginning of this year that we were going to be very comfortable with that. And then the last piece was really just talking about the macro industry and what's happening. And, you know, whenever you have one buyer, you don't have any buyers. But anytime you can bring two buyers to the table, you have a real opportunity to sell your business, right? And so for us, having 6 offers, we were able to see a pretty significant increase in our multiple, which resulted in dollars. And then the other thing to be thinking about too is just, you know, there's certain stages of your business. And for us, you know, Jeremy mentioned the 3 cohorts of products. Like we wanted to exit the business knowing that there was growth ahead. There was opportunity to take it to the next level. And so if we sold our business with every product being mature and our earnout was based on, you know, 2-3 years or 1 or 2 years or whatever it is, based on potential proceeds that come from this business. If the business is at the top, there's no place for it to grow, which means your earnout can be significantly reduced. So, you know, understanding that you have mature products, that's great. You have stability, but those other 2 products that continue to have upside to grow and products that were recently launched that have opportunity to gain traction, knowing that pipeline was built helped us feel really comfortable about coming up with an earnout structure that made sense for us to continue to enjoy the benefits of the business we built, right? So those types of things are really, really important. I think it's easy to get focused on what's the right time, what's the right timing, but we were more macro about it and just having some key pieces in place like financials and, you know, and understanding around your product assortment and the timing of that made a ton of sense for us to be prepared.
Mm-hmm. Got it. So now to you, Jeremy, in terms of, you know, the deals that you guys see on a regular basis, what's kind of the average time frame that people have been operating businesses, and what's your insight in terms of the timing that people want to sell?
Yeah, it's a great question. So we most people will hold their business for a minimum of 2 years. Some people sell it for less because, you know, the business or after they've owned it for a shorter time because operationally the business has kind of outgrown their skill set. I think in terms of from a timing of when is the right time to sell, like Josh is right that the market right now is hot. Multiples are high. It's a great time to exit because you potentially will get a higher exit multiple or valuation for your business than you may in 12 months' time. The other thing that he sort of nailed is it's very hard for a buyer to convince themselves not to buy your business when it's growing month on month. And Josh's business throughout diligence, like it just kept underwriting, it just kept going. Every time we got like a new profit figure or we tracked weekly revenue, it was just higher than it was last year. So like as a buyer, like most buyers are trying to convince themselves of reasons not to do the deal as much as they are trying to convince themselves of reasons to do the deal. And with his business, like people ask, like the CEO asked me, how's that going? And it's like, yeah, the thing's growing like a weed. Let's get this deal locked up. So timing your exit to make sure that you are kind of do have growth left in the tank is really important because buyers will pay more for a business that they perceive is growing. And Josh, you know, the business had a bunch of products that were growing and had been launched. So it was very easy for us to convince ourselves that there's more growth in the tank here. So as buyers think about the time to exit, it's important to think about what growth profile are you giving to the buyer, because they will pay more for it. The final point I'd say is being ready and how you show up to your exit is really important. Like, messy accounting can equal a lower price. Not having all your trademarks set up can equal a lower price. Not having enough inventory for the next 90 days can equal a lower price. So getting all of that stuff lined up and ready is really, really important. And it makes all the difference. So just, a few couple like tangible kind of tips there for people thinking about an exit. Then really, like, when's the right time for you? It's often either the market is strong and you want to capture that trend, or it's for personal reasons. And the personal reason that we get a lot is, the business is too big for me to manage and it's out of control. Like, this side hustle has blown up and I can't manage it. I'm stressed because I've got too much of my net worth tied up in this business. And the third one is, I want to take these proceeds and move on to something else. In terms of investments or starting new businesses. So they're often a lot of the personal factors. I think with this business, like, these guys could have kept running this business for another 5 years. Like, they were that good. But they've got a bunch of exciting things that they're going to do next with their lives, and this provided the capital base for them to do that.
Got it. So the second that Josh came to you guys, from that point, and Josh had sent you the email, Jeremy, what was the timeline there? How long? I'm always fascinated by the timeframes that it takes for something like this to go through. And I think Amazon businesses especially are so fascinating because all the data is right in front of you, just like a Shopify store. It's just all right there. So what was that timeline for Elevate Brands?
Yeah, great question. So for us to do the hardcore underwriting, that took about 3 to 4 weeks. And this was a bigger business. There was something like 650 SKUs when you ran the business report in Seller Central. So it just took a little bit more time. There was a few different markets that they were selling into and different kind of non-Amazon channels. So that just adds a little bit of complexity. But the other thing that we did is we kind of, we decided to sell the business off the trailing 12 months earnings, a couple months after we signed the term sheet, to just give, and that just helped Josh get a higher price for his business. So all in all, the process took about 2 months, but given it was a bigger business, that just helped us transition the operations over to Elevate, and it was the best thing for the business. So, typically for a small, simple business with a few SKUs, it takes anywhere from 30 to 45 days. But for bigger businesses like this one, a lot of the heavy lifting was done over the kind of first 4 weeks. And then we just had to update things as we waited for, the February performance to kind of roll through. So, yeah.
Got it. So Josh, the finale question that I like to ask everybody on the show is, knowing what you know now, what would you tell Josh 10 years ago?
Well, I feel like it's sometimes you can easily say you're too late, right? And so, 10 years later, which is now, we still are doing something that we should have done 10 years, and that's invest in more around the services and software side of this industry, right? The e-com space is continuously growing. So right now we're taking proceeds and investing in an operating software that works with large enterprise resource plannings, right? ERP, called Plantel.ai. And it's really about large Amazon brands or e-commerce brands help better manage their multiple brands, their businesses, and currencies even, and creating really clear operational workflows that help them scale. So that stuff was not around, in 10 years ago. And having the insight now and understanding those trends and where the puck is moving, would have been invaluable. And the same goes for our other business. Brandedseller.com is something we launched to service a need. And there's an explosion of guys in the space that are marketing agency for this, listing management for that. It's a skill set that we have that we certainly needed years of experience to perfect, but getting into some of those areas earlier on certainly would have helped create a tech business that's worth multiple times your top line revenues versus multiple times of your profit, right? Which can be certainly much larger numbers. So, lessons learned at the same time. I think every day is an opportunity to learn and grow. And if you look back, there's never any regrets.
Well said. Well said. And I'll pass that finale question off to you, Jeremy. I mean, you guys have seen a lot of companies coming through for Amazon. Knowing what you know now, what would you tell yourself 10 years ago?
It's a good, like one of my life philosophies is kind of like everything happens for a reason, and you do create your own luck. So as I've kind of tracked my career from starting in kind of investment banking through to what I'm doing now, like I kind of see all of that as like, over 10 years worth of experience that have put me in a position where, we're going to build a really great business with Elevate. And I kind of see like everything's kind of coming to a cacophony right now where we're focused on the right opportunity set at the right time in history. And we can build something really special by aggregating and bolting in great brands like Josh's. So for me, like no regrets. The only thing is if I'd started 3 years earlier doing this, then we would be in a very different place, because multiples, 2 years ago were at like 2 times. Whereas now they're going up, but it's fine. The valuation of everything's going up. So yeah.
Got it. So where can people go and learn more about Elevate Brands?
Just check out our website, elevatebrands.io, or drop me a line if you're interested in selling, jeremy@elevatebrands.io. And yeah, I'd love to connect and learn more about your business.
Excellent. And Josh, where can people go and learn what you're working on?
Clearly LinkedIn. I love to connect with anyone in the space. There's still new stuff to be started, but brandedseller.com would be the probably most lucrative place for any sellers that are looking for insights into growing their brand, A+ brand content, videos that we create, but also just really helping other sellers, Amazon sellers, walk through the process. I can make a lot of introductions and put you in a contact with folks like Jeremy who can take your business off your hands. So looking forward to connecting there.
Excellent. Wherever you guys are listening to this, on iTunes, Spotify, or SoundCloud, all the links that Jeremy and Josh mentioned will be in the show notes. But once again, thank you both for coming on the show for this special episode.
Thanks for having us.
Thanks for having us.